Felix and, of course, Winston here in its full life force stage. Today is a tremendously important Monday, and I'll tell you why. Because so far, for the last couple of weeks, the market has been completely preoccupied by tariff talk. There's also recession talk. But what ultimately drives the stock market is not what Trump says or what the Fed says or any of that nonsense. It's whether the big companies, the ones that matter, deliver good earnings and optimistic guidance. That's ultimately what it's all about. And this is the week where some of the really big boys bring their earnings out. And I want to walk you through those. So we're going to kick off here with SoFi, PayPal, Starbucks, Meta, Microsoft, Robinhood, Amazon, Apple, Airbnb, and some of the oil majors. And if that doesn't keep you busy enough, then let me share my screen with you for you so that you can see what I'm looking at here. Because after that, we've all got some tremendously important key dates for this week. I'm talking the kind of data that really moves the market. And you need to understand it. I hope you write it down so you walk away from this in the next few minutes as one of the best informed investors out there. We also have a Trump and Fed update. That's really important. And weird, I've got the wrong banner here. Oh, interesting. Let me see why that's happening here. So I'm getting distracted with my little setup here. Why is that happening? Interesting. Okay, I'll change it. What is also really important is that I'm actually bullish for now, not for the long term. So, and that's a weird situation you can find yourself in, is you're bullish right now, but you're concerned about the longer term. And this week really will possibly flip my opinion on that. So I also want to give you the reasons why I'm bullish, because I think there's a lot of money to be made right now. I literally set up about 20 buy orders this morning. And there's a but though. And the but is an important warning that most people are going to miss out. If we get another couple of green days, everyone's going to be back in la 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 and thinking everything is going to go up forever, and then they're going to lose their shirt again. I want to make sure that isn't you. And then we also will do a big juicy Q&A. So let me, there was a HIMS ad, was there? Okay, interesting. All right, so let me walk you through, first of all, these earnings. So these are all the earnings this week. Now, we're not going to go through all of them because I think that would be silly. So I've selected what I deem to be the most important, the muy importante ones. What's Spanish for most? Somebody must know, right? SoFi, PayPal, we're going to look at Starbucks. Why? Because it tells us a lot about the consumer. Microsoft and Meta and Robinhood, because Robinhood, again, tells us a lot about the consumer. Amazon and Apple, well, because they're the biggest things out there. And then Airbnb tells us quite a lot about the economy. And then we'll also look at, we'll round it off with a little bit of oil, which is Exxon and Chevron. So if you want to understand these stocks, what's happening this week, we're gonna keep doing that here. So Más or mucho? Okay, there isn't a mucho más. There probably is, right? I'm sure I've heard that before. Thank you very much for that. So, all right, so we're going to kick off a SoFi here. I've pulled it open in TradeVision, which is the app that we built to give you guys the best data points, and you understand, and you'll see me use this in live action. Now, I've put a couple of sort of Kandinsky-esque lines on there to make this look like art. But the first thing I wanted you to see is you can actually see in here the earnings forecast. So it says here, Q1 earnings expectations, upcoming earnings on April 29th. We're expecting earnings per share to be at 3 cents and revenue at 743 million, which is up very, very significantly. Now, what happens if you don't hit those numbers? Well, all hell breaks loose. So actually, as a company, you want to exceed the numbers. You also want to slightly exceed the numbers. Los más importantes. Thank you, Chupa. I see I'm learning Spanish as I'm doing this. This is very useful. I did speak a very little Spanish. It was mostly, asking for drinks. I used to spend quite often my summers in Madrid, which is one of those amazing cities. It's probably the funnest parties in the world. I'm sure the South Americans will disagree, but from a European perspective at least. So what do we see here? Okay, couple of lines, and let me just delete all the lines, okay? Just so it is clean and clear. So what have I got open here? I've got 2 indicators open. a 50-day and a 150-day. That's all I've got. And by the way, guys, everybody who's asked for custom indicators in TradeVision, you now have them. Now, it looks to me like you can't see my full screen, can you? That pesky banner is a little large. Okay, let's make it a little bit smaller here. There we go. There we go. Okay, that's a little bit better. Right? So you can see here, down here, you can toggle those on. You can set your own now. Like you can literally do whatever you want with them, whatever period you want, whatever color you want. It is up to you. So the 50 is the yellow one. The purple is the 150-day moving average line. I always have those on because they really are what every investor, and yes, I'm saying investor, I'm not even saying trader. So that's your 50-day moving average line, the yellow one. And then in purple, you've got your 150-day moving average line. You need to have those on a chart. Otherwise, you don't know what the heck you're doing. Why? Well, generally speaking, we want to buy, get a more neutral color here. Generally speaking, we want to buy when we're above them. So the 50 is here, right? So we're above that one. This morning, at least, we're above the 150. Now, I like to close above the 150. But this is a very, very, very nice recovery rally, right? Very nice bounce up here. And look at the volume. Look at the volume. The volume is increasing as we're going up. There's some real strength in this. Fintech is back. Yay. So this is very good. Now, the next question, of course, you're going to have is, well, SoFi going to move? How much is it going to move by? So on the right here, you click on options. And that takes you into the deep, dark recesses of the options world. But there is one thing in here that everybody, again, should understand. Stock investors, stock traders, options traders, a lot of you. And it's that blue box here. And can you see how that actually now says expected move? Right? That's the blue box. That's the expected move. So if I extend that blue box onto the chart, and we're going to do that as a feature, by the way, because I think it'd be a little cleaner for everybody else too. What am I doing? I wanted am I allowed a line? Yeah. It's basically saying to you, the stock market, in its infinite wisdom, by Friday this week, is saying that the stock is either going to go up to 1479 or it's going to drop down to 1165. So that is what it's telling you. Is that useful? Yes. Can you make money out of that? Actually, yes. Yes, you can. Actually, you can set up range-bound trades or the opposite of that. I'm not going to walk you through options trades here right now, but it gives you quite a good indicator of like what's the market expecting here. On good earnings, we expect to go to about just under 15. On terrible earnings, we expect to go to about 1165. You now know more than 99.9% of the stock market because hardly anybody understands that, right? And Scott, you're completely right. If I use the word one standard deviation, though, I lose about 90% of the audience instantly. But yes, that's what the calculation is under that. So it's based on really what the options market expects. It's real hard data. It's not something that I sort of conjure up in the comforts of my little den here. Not even Winston made that up. There he is. He's looking. Winston, hey. He's actually awake. Good point. All right. So let's go back to that lovely chart then. And let's look at the next one. Okay. So we're going to look at PayPal here. PayPal, as I call it. There we go. And again, you know you can use TradeVision down there. If you actually want to understand the rules that make me want to buy and sell these stocks and the actual levels I buy and sell them at and why, then again, I'll teach you that completely for free. But in the interest of not making this video 15 minutes longer than it needs to be, I put that in a separate video for you, which is 15 minutes long and which you can watch completely for free at felixprehn.org/get-free. You might be thinking, well, how does this guy know it? Why should I listen to you? Well, you shouldn't. But you see, I learned this from a bunch of retired bankers, traders, guys who worked in Chicago and New York and who've done this 20, 30, 40 years. These rules have been around since the 70s. People have been making money pretty reliably with really solid risk management since the 70s. And they never thought they'd share it with people. Why not? Well, I guess they were just too busy making money themselves. So if you want to actually learn that, then, as I say, check it out because it's really important. It literally changes your life completely. Now, quite a few of you guys in here in the chat, I've seen you talking. Are you guys finding the rules that you learn from me guys useful? If you find them useful, write useful in the chat to all the newbies who are like, I don't want to go and watch a 15-minute masterclass. I don't have 15 minutes. Well, if for the rest of your life you could be making a heck of a lot more money than you're making right now, maybe you'd find the 15 minutes, right? So now, Scott says, saved my chicken. And the bacon, right? So, okay, PayPal, right? What are we expecting? We're expecting here earnings per share of $1.16, revenue of 7.85 billion. Look at how many useful there. Isn't that amazing? Isn't that amazing? That actually makes me incredibly happy, because that's the whole point here. So I actually give you stuff that's really, really, really useful. So if we look at, yeah, so if you guys haven't gone to felixprehn.org/get free yet, you are clearly missing out, because there are about 100 people who are writing useful in the chat here. Thanks for the hearts as well. So what are we expecting for PayPal? Well, there is very little positive to say on the chart, because this is a falling knife, right? Falling knife. And the only thing you could say, if you were an eternal optimist, I am actually an eternal optimist. I try not to let it get in the way of me making money in the market. That is, to me, likely the near-term bottom. Right? Now we're going to retest that bottom on tomorrow, Tuesday. No, by the way, for you guys who are playing this back later, you can skip through. I'll try to put timestamps in for all the different stocks. So that blue zone there, you're basically expecting to go up or down $5. That's really the easiest way that I could possibly phrase this. Plus, minus $5. It's not that big a deal, but it's also kind of a big deal, because it's kind of 8% move for a stock that big. It is important. Now, if we go back to 60, right, we still are not hitting the low of lows. If we go back to 71 up here, we're basically hitting that high there, right? So you can kind of see how the market works. The entire stock market, all the guys who are coming up with these numbers, which is the entire options market, which is about 85% of the market, they are looking at the same chart, and they're looking at the same rules that I keep yabbering on about. And if you learn them, your life will get a heck of a lot better. That's my promise. And honestly, you will just never have big losses again. It's really avoidable. It's really, really avoidable to have big losses. So, okay, that's SoFi and PayPal, right? Is that somewhat useful to you guys? Starbucks, let's look at Starbucks. And I like Starbucks because it tells me quite a lot about the American consumer. When the American consumer stops driving in some sort of enormous gas-guzzling thing that you call a car, I call it sort of I guess you call it a truck, don't you? And you know, you get yourself a cup of coffee because making coffee at home is just wrong, isn't it? Then the economy is in trouble. Now, Starbucks has also been particularly horrendously managed here. And the usuals are still coming in, which is cool. So we had that flat zone there. And what did we do? We bounced about 20 times against this purple line, which is the 150-day moving average line. And that screamed, sell. That's what that said, about 20 times. And then when you guys just still hadn't done it, they're just, let's just give them a gap down. And then that was another sell. And then let's give them a second gap down. And that was sort of the real thing. But generally speaking, bad things, that was the early warning signal. The real early warning signal was actually up here. It was 1, 2, about 25, 26, 27 to get the heck out of this. Right now, well, there is a little bit of optimism being established in good old Starbucks, because we're seeing something like this, sort of a little bit of an uptrend. Now, fly in the ointment, fly in the soup, even in your coffee. Yeah. It's like someone spat in your coffee because the volume is going down. So no one's freaking buying this thing. No one's excited. No one's front running earnings. And you know what? Somebody always knows something, right? So I like to actually look at earnings the day before and look at, hey, what's everyone doing? Because there's usually somebody who knows something. But at the moment, this is just very, very low expectations, I'd say. And that could be a good thing for Starbucks. You know, we're expecting literally minus 26% earnings. So they might beat that. I'm hoping that they'll beat that. but at the moment it doesn't have a lot of like oomph in it. It's a bit of a flaccid stock. Now going into Wednesday. Why is Tom Lee predicting a 10-day stock market rally? I don't know, but he's a perma bull, and he has an ETF to sell. It's probably more helpful if the market's going up. But I'm not saying he's got his heart in the wrong place, by the way. I think he's probably got good intentions. I'm sure he's got good intentions. I'm nothing against the man. But what I'm saying is, what was I saying? Well, I think one reason to be optimistic is good old Google. Google had pretty low expectations for earnings, and they really, really knocked it out of the park. So that has us feeling optimistic that the other big boys, the other grown-ups, well, the grown-ups and the little girls, the other grown-ups, I was, of course, in no way, shape, or form referring to anybody related to Microsoft there. I just had a random thought. Just want to clarify that one. The other grown-ups are hopefully going to do the same thing, right? Now, as you can see here, we've already moved up a little bit in line with Google. So we've made it a little bit harder for Bill's little plaything, Microsoft. Don't know what else you're thinking of. And therefore, it's a little tougher for Microsoft to deliver the way we expect them to. They're reporting on Wednesday, 28th, by the way, not on, as we're saying here, the 30th. I'll see that we... okay, it is actually correct in here. It's just showing up on the wrong... Oh, no, it is correct. Wednesday, 30th. Yeah. Cool. So what are the expectations? Let's have a look in the news. This is all on Trade Vision, by the way. Microsoft has said a report expected $3.23, which and revenue growth driven by Azure. So basically, we expect Azure to do pretty well. That's pretty much it. They've restructured their sales team. Oh, yeah, upcoming earnings, projected EPS 323. Yeah, that's basically it. So is it a little tougher for them? Well, yes and no. So there is definitely a bit of a, irresistible resistance line here, which I'm going to make red for you, if I'm allowed. Apparently not. It says no to red. There we go. So what does that mean? Well, it just means that we've hit pretty much the current price point here, actually 4 times even. And those things create resistance, right? Now, what also creates resistance is where the actual market's positioned. So the market's positioned at $400. So for Microsoft to knock it out of the park and break through $400, and we have the expected range of trading by the end of the week, by the way, and I'm going to put a lot more lines in this, just make this into a really fun chart. We're expecting the stock to go basically plus 20 or minus 20, right? Fairly big range, not massive, but fairly big range. Now, if they come in with good earnings and we go above $400, I tell you, we're in for a party. And I think that's probably what good old Tom is talking about, that Microsoft reporting good numbers will, after hours on Wednesday, it'll give us an amazing rally on Thursday, unless Amazon really screws it up, which seems unlikely. If Microsoft does well, Amazon probably will too. Now, the next one on the list here is good old Meta. And that has not had, well, it's gone up a little bit, but not that much. It's still pretty close to the sort of misery lines. It's gapping up this morning, which is definitely a positive at 557. But can you see the enormous gap still to the moving average lines up here? They sit at like 600. So we still have to go up an extra $50 to get anywhere. For that very reason, the market is pricing in this huge even expected range. So the market's saying we're either, from where we are right now, we're either going to go up about $45, or if they disappoint, we're going to literally find ourselves back in the low 500s, sort of 510, right? So you can see why this matters, right? So we're expecting a monstrous move, 10% or so, for Meta here. So again, the key numbers, you can look them up in here. What we expect here. It's also in the news bit here. On the key drivers are somewhere, isn't it? No, but it's down here. So yeah, so we're expecting $5.22, which is only a 10% year-on-year growth, which isn't really all that much. So shouldn't be that hard. I think given that Google's come in with such good ads numbers, you'd expect Meta to come in with similarly good numbers. I'm feeling pretty good about Meta. It's more some of the other guys that I'm worried about. Now, what about Robinhood? Well, Robinhood makes, how do they make money? Anybody know how they actually make money? Robinhood makes money basically on transaction fees. So it's a fee-based system. Now you're saying, well, hang on, they don't charge any fees. How do they make any money? Well, they basically sell your trades and your data to a lovely organization called Citadel, which is run by the kindest, most charitable, most marvelous people in the world. It's all about children's charities and kittens around there. And they then front run your trades. Actually, sorry, that was I misspoke. They obviously don't do that. They execute your trades in your best interest. Right? That's the story. So they make money when you guys trade a lot, which is why the app encourages you to trade a lot, and it looks a little bit like just a little too fun for an investment app. I would argue, but they're doing a good job on the UI side for sure. So they've had a tough time when markets go down because people typically don't want to trade or buy things. It doesn't feel good when the market's going down, which is ironic because that's the exact moment when you probably should. So I know they are spinning out into all sorts of other new products, but we're expecting to come in with 34-cent earnings per share here, which is 45% up on the year. Now, the expected range on this little bugger is pretty significant. So it's in that sort of a zone. So we're going to go up or down about $4 or $5 when they report earnings, up or down, depending on how good this is. Now, we are exactamundo at the resistance line here at 50. Now, we're trying to break through that this morning. Hopefully, we'll manage that. There is something in these sort of double bottom things. Ideally, the second bottom would be higher than the first. There is a mini third bottom here, which is a little higher. But they can be quite powerful setups for an actual rally because you've shaken everybody out. Like, let me highlight that for you. You shook everybody out here, right? Or even here. Then you did a little rally. You shook out people again. You did a little rally. And then there was very little to shake out that was left. And that's what sets you potentially up for a really, really explosive growth. So actually, I like this setup. I think this is actually really quite a bullish setup from Robinhood here. As long as the earnings are decent, I think this thing is going to go back to all-time highs. That's kind of what I think. Well, I don't know where all-time highs were. At least recent highs, which is 66 or something like that. That doesn't mean you should run out and buy the bloody thing, of course. For me, it's just one teeny-weeny position. It is not, it won't really affect me if it goes up or down very much. Felix for Prime Minister of Canada. Good God. Don't wish that upon me, please. I like my freedom. I woke up today. Actually, I woke up quite early today. I woke up at 8:30. I had an alarm rang today, which never happens because I went to go get my teeth cleaned. There's a really lovely dentist. So did that. Went for brunch at the beautiful 5-star hotel. Sat there. My driver picked me up, drive me home. Hung out with Winston for a bit. Where is he? Here he is. And then set up about 20 buy orders and mailed you guys or pinged you guys in the coaching community my view for the week and the long term and all my buys and all my entry points and all my exit points and all my stops and everything else. And that's been the day, really. And it's been rather pleasurable. And now I get to go through my favorite thing to do, which is look at charts. So life's good. Being Prime Minister sounds horrible. Pope, well, I'm not a Catholic, so that's never going to happen. I do like the infallible part, though. I think that's pretty good. Like, no matter what you come up with, you just say, I know, but I'm infallible. I'm right. That sounds like a fun thing. We shouldn't take the piss out of the Pope. Right. So Amazon, Bill Gates, though, yes, not quite the same character. Amazon. Well, classic kind of long-term kind of down move here, right? Something like that. We've been really going down pretty hard on this one. Why? Well, China tariffs, they do sell most of the imported cheap plastic that is sold in the US. And a lot of that, of course, is related to, well, it comes from other countries. And the thought, therefore, is the Amazon business is over. Now, the retail business of Amazon isn't actually where the money is made. It's got horrible margins. Estimates are something like 3 or 4%, maybe a little bit more, not a lot. They really make their money with two things. And those two things are, anybody? AWS, yes, cloud. They also make their money with ads. Yes, their ads business is bigger than YouTube. It's a pretty significant thing. And then, of course, the retail business has allowed them to get everybody to pay them regularly through things like Prime and, all that kind of stuff. There is a lot of other businesses that are sort of adjacent to this, but this is where the money comes from. It doesn't come from you ordering loo roll on Amazon or, I saw that the price of, I don't know, plastic woven kitchen towels are going up from $1.20 to $3.30 or something on Shane or Sheen or whatever you pronounce it. Real tragedy. Apparently also stick-on footnails, toenails are going up about 100% in price, which must be just, a real shocker to American women and some men probably. Does this stuff really matter? Do we need $5 jeans? No, I don't think we do. But anyway, that's just my point of view here. So Amazon, I think it's a tremendous business at a tremendous price point. And we're trading right now at September prices, at June prices, at April prices. So am I liking this? Yes. But there is a but. The chart still looks pretty negative. We haven't reclaimed the 50-day moving average line or even the 150. And in this latest rally, there's been very little volume, so not looking particularly good. So the real key for Amazon's earnings isn't actually the numbers. It's actually here. Upcoming earnings, projected earnings per share, $1.37, $153 billion in revenue, likely to drive based on AWS new comments. Really, all we care about is AWS. The AWS numbers are out of this world. And George says, not my nails. What matters is what's their guidance. Are they saying, look, AI, cloud demand is out of this fucking world, and we're therefore going to do really, really well. And we're excited about everything else. And e-commerce is going to do tremendously well because people are still going to buy stuff. And okay, if we go into a recession, we'll make a little bit less money on that front, but who cares? Which is kind of what I'm hoping they're going to say. Or are they saying, there is a lot of uncertainty in the market, and we're worried about the recession and the US consumer and tariffs. It's an ongoing uncertainty, in which case the stock tanks. And if it tanks, how far will it tank? Well, according to the marvels that we call the options market, because we got that data in here. See that little blue box here, the expected move? That's it. That's where the stock's going to go by the end of this week. So it's either going to go up $10 or it's going to go down $10. That's about right, isn't it? Something like that. So basically plus minus give or take $10 is the market's expectation for Amazon this week, which is pretty good because it's not like a huge move. Or is it a little bit more than that? No, it's about, maybe it's a little bit more than that. So reasonable expectation for Amazon, I think, which is quite good. But that's going to be the real test, I think. Apple, I think everybody expects Apple to come out with the, we don't know what the heck we're doing here. We haven't actually known since the last chap we had who had a brain died. Since then, we've just sort of been selling the same phone in different colors, and we hope nobody would notice. But now all the Apple phone users here are going to go really angry, aren't you? But it's kind of true, though, isn't it? They haven't really innovated at all. So what have we got here? Horrible downtrend. The only good thing is that the low was pretty low and we're fairly far above that. So we're probably not going to revisit that. I think we might revisit here the sort of 190 low if the earnings come in terrible. On the upside, I'd say we're not going to make it through this level here at about 220. That's my guess based on the chart. And they are hopefully going to tell us a little bit more about their supply chain. So they're planning to move all iPhone manufacturing to India by 2026. And That's offensive nowadays, isn't it? But people don't have a sense of humor, which I also think is offensive. So ring the bell. Oh no, I can't ring the bell. Winston's camera is hanging off the bell, so I can't ring the bell. The new bell hasn't arrived yet. If I ring this, it's going to fall on Winston's head. So we're not going to do that, are we, Winston? So we look at the live market in just a second, guys. So yeah, Apple is a big one, but I think expectations are so low, it's hard for them to miss. That's kind of what I would say. And then running through very briefly, Airbnb, we'll have a quick look at the oil majors as the market's about to open, and it's going to get incredibly dramatic. Oh my God, are we going to do it? Airbnb, don't even know what the ticker is. Here we go. Airbnb are, yeah, not a pretty chart. It actually looks almost as horrible as the Apple chart. See, that's the trend. Little bit of a recovery here. Volume is in the doghouse, and we're below all the key moving average lines, which is just horrendous. So we're expecting massive, massive, massive up or down by earnings, about $20 up or down. So that's pretty crazy for a stock that big, right? That's like 18% up or down. So definitely a madhouse. Why do I want to walk you through the pain of oil majors? Because it actually matters. It tells us quite a lot about the economy and everything else. They are below their moving average lines. They have pretty good support down here at all these lows at about 105 or thereabouts. And then on the way up, there's also pretty strong resistance here at about 112. So I wouldn't expect huge moves there from the oil majors, but I'm going to listen in, or at least read a summary of it in here inside TradeVision, because it's going to tell me quite a lot about the economy and how tariffs are shaping everything up. When is the last time you traded earnings, Felix? 1926, I'd like to say. German trying to be funny. I know that's offensive in itself, isn't it? Exactly. I completely agree with you on that one. So is the market now open? Yup, it is. Shall we have a quick look? Let's have a very quick glance at the heat map. And then I wanted to also walk you through the biggest events of the week. How are we going to get through it all today? Pre-market looked like this. Tesla up, Meta up, Nvidia down, Amazon up, everything else flat. Flat, 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 which is not terrible, by the way, because futures this morning look pretty dicey, and they've actually turned green. VIX is coming down again, which is wonderful, because that's really the one thing. Again, if you're only going to watch one thing today, one thing for the rest of the week, one thing for the rest of the month, it is the ticker VIX. It's your best friend. It tells you whether or not the market is panicking. Actually, we're up a little bit. We're up 1%. We're at 25. We can kind of live with 25. We'd like it to go, obviously, towards the 20 zone, but 25 is not as horrific as the 35 where we have been. You used to trade earnings a year and a half ago, John. No, I know you're right. I know you're right. Well, it's just earnings. For some reason, the market has gotten a lot more volatile. So you get these very unpredictable earnings. I think this is another very unpredictable earnings. So you get earnings coming in and a massive, like $2 trillion stock goes up or down 20%. And you're like, this is not meant to happen. So I like to make my money in a really boring manner. I don't like the excitement of it. So I love trading earnings. It's one of the greatest trades really ever, because it's really wonderful. It gives you a nice little edge. And if you do a lot of them, you can make a lot of money. But it hasn't really, it's just been too unpredictable. So Trump adds to the unpredictability. Basically, VIX is too high. That's what I'm saying. It's profitable in theory, but it's a 50-50 job right now. Right. So it's still funny. Okay, good. And if you're not entertained, then I would be terribly offended, and I will, kick you out. That's what people say, right? Someone makes a joke and they go, "That's not funny." It's like, it's just, you don't find it funny. They're like, "No, it's not funny. It's offensive." I'm like, "No, it's just you lack a certain sense of humor." And they're like, "No, it's offensive. You should be banned." You're like, so, okay. So we run through in incredible fashion the key earnings here. Now you're better informed than everybody else out there. What are you going to buy? What are you going to buy now? What are you going to buy? Are you going to buy any of these stocks I just mentioned? There's some nice opportunities in there. Actually, I set up about 20-ish buy orders this morning. None of them were the ones we just talked about. They're creeping onto my about to buy watch list again, but we're a little bit early right now. Do we have a mobile trading app? I don't really trade on mobile. I mean, I use Thinkorswim. TradeVision's mobile app is out, which is cool. TradeVision is out for iOS. It's out for Apple. the one I made fun of, which is ironic. But yeah, and Android hopefully out this week. But yeah, I don't know why I'm showing you this. I didn't want to show you this. I wanted to show you the other one. I wanted to show you the one that's on the screen here. Learn how to pick stocks based on rules. And if you join us a little earlier, and all the guys who were saying useful, 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 and there were hundreds of them, that's what they're talking about. felixprehn.org/get free at the bottom of the screen. If you watch that, you'll be much, much better off. You will never have a big loss again. That's really my promise there. Trade Vision Mobile is awesome, says Brian. Brilliant. Love to see that. I've been playing with a little bit. I don't use my iPhone very much, obviously for strong religious reasons, but I do have one in a rather peculiar sort of shade of something. I bought this. I don't use it. I just use it to see the app, really. I can't really tell the developers what I'm thinking if I don't have a phone. So I think I spent $100 on that. So I don't know if it works, but it works for the app. Anyway, inside Trade Vision, the almighty software that we're talking about here, it tells you this. Upcoming events, a screenshot. So what are the numbers I'm watching out for? I'm watching out for job openings. Why? Pourquoi? Because job openings come and go like that. Right. If you want to hire 5 people tomorrow, you're going to put out 5 job openings. If you think your business is about to go down the tube, you're going to cancel all your job openings. It's immediate. Whereas if you want to fire somebody, A, it's unpleasant. B, you want to think about it. C, you got to call your attorney. So that takes a while. So job openings are very, very, very quick. And we'll go to the recession talk in a second. Inflation. This is Jerome Powell. This is his favorite inflation metric. And you must live a very, very odd sort of a life to have a favorite inflation metric, but this is it. The core PCE, this comes out on Wednesday. Spending, yeah, okay, so on. And then on Friday, again, I look out for non-farm payrolls because that's what Wall Street watches for some strange reason. I think there is actually ADP data out on Wednesday as well, which is private, probably a little bit more useful. It can't be massaged as easily. Now, there is a thought out that if Donald, I used to call him the orange one. I've actually changed my mind on that. And you know why? Because apparently, I saw someone recorded 2 TV screens. One was CNN and one was Fox or something. And on CNN, he was bright orange. I mean, we're talking like this kind of orange and that kind of orange. And on Fox, he was a perfectly normal color. So it could be that I've been exposed to TV stations who put a filter on them, which is kind of silly. Did you see that thing about the suits at the Pope's funeral? Some people are saying, well, you went there in a blue suit. He was, this wasn't the right thing to do. Half the bloody audience is wearing blue suits. But again, some of the media obviously crops that out. So just saying. I shall no longer call Donald J. the orange one, Trump the orange one. That was the last time, probably. So what is he saying? Well, he's saying that I want to cut income tax substantially for people making less than $200,000 a year. He's talking about, in his mind, the really poor people. Probably, right? He's saying that's going to be a good thing. Now, what he really needs is for the Fed to cut rates. If you really wanted the Fed to cut rates, you've been CNN, yes, probably. And also, like, I mean, I live overseas, obviously. The only real American channels, like, I don't have a television. So when I used to watch a little bit of Bloomberg, I no longer do. But if I'm in a hotel room or something, if I put on TV on, it's CNN. That's usually the only American program on there apart from sports. So yes, I've been CNN. Or maybe Fox filter him. Maybe they toned down the color. That's, of course, also possibly. Ceremoniously adopted by The Simpsons, yes. So if Trump really wants a big rate cut, what does he need? He needs jobs numbers to come down, or another way of looking at that would be unemployment to go up. Now, he could take a leaf out of the playbook of Joe Biden, who just made up jobs, right? He just made up the numbers, just added them. And he wasn't the first one to do that, obviously, but, they just make them up. It's a statistical readjustment, seasonal, God knows what. And they did that on a massive scale, millions of jobs. So he could do the same. He could just delete jobs from the statistics. It's very easy to do. That could actually give us rate cuts, massive rate cuts. Now, here's actually it's a chap I follow on X, James, and I think he's actually right on this one. So he's saying the Fed is hopelessly out of touch. And this is not a political statement. I think he is hopelessly out of touch. The private sector is in bad state. Throw tariffs into it. The Fed is late. Do they even listen to earnings calls? And this is true. PepsiCo said, compared to 3 months ago, our outlook on consumer sentiment is not as optimistic. Southwest Airlines says, this is a recession, right? Domestic travel demand is collapsing. I still don't know how to say Chipotle, but something like that. Reports its first decline since 2020. Walmart warns consumers are tapped out. So the Fed is saying he's saying the Fed is not data dependent. They admit rates may need to fall fast once job losses spikes. Now, the idiocy of that, and this is why I really understand it, it's very frustrating. Rate cuts. So you cut rates, okay? How long does it take for the real economy to pick up? What's the lag? Okay, I studied economics. I was taught it was 18 months lag, 18 months. So if you wait for unemployment to spike and you then cut rates, you are creating jobs 18 months later. So you need to cut when you think there is a chance or a likelihood that the economy is slowing down. Like, you need to be proactive, right? It's like risk management. We don't sell the stock when it's 80% down. No, we sell it when it's like 5 or 6 or 7% down. That's risk management. If we waited till it was 80% down and said, I think we should have sold this one. Yeah, I think you're right, Bob. What are we gaining? We're idiots, right? So the Fed is hopelessly moronic, I think, at this point. Chipotle. You guys have tried to teach me that before. Chipotle, it never really works and it doesn't really stick. And a week later, I still don't remember it. It's one of those things. It's just, I don't know what it is. What does it even mean? What does it even mean? Anyway, so that's what I'm saying. I'm saying that there is a serious risk of a recession. There is a serious risk of a long-term slowdown in the economy. But for the moment, I'm optimistic. And from the moment I'm buying things, because I think there is a tremendous opportunity here for a little while. Chipotle. Chipotle. Okay, this is not going to work well, is it? But seriously, what does it mean? What does it mean? What does it stand for? It must stand for something, right? Or is it actually a word? I don't know. It seems very silly to me. I've probably offended the, what is it? Is it Mexican or something? I don't know. All right. Half the audience just left. Today is turning into Spanish or speech therapy. It's a chili smoked. It's a pepper. Okay. Smoked jalapeno. Why didn't they call it jalapeno? That's easy. That rolls off the tongue, right? But chipotle or whatever. Okay. Anyway, smoked jalapeno. That's what I should call the company from now on. Okay. Do you remember how everybody said everyone hates the United States and everyone's selling all American stocks and this is the end of the world? I'm sort of paraphrasing mainstream media here. They were a little bit right. Like, foreign investors did sell, we think, something like $61 billion in American stocks. So, a little bit more than usual. But Goldman Sachs, the bankers who care, they think they've stopped selling. And they think there is a significant chance that they're going to start buying the rally again because, let's face it, they actually sold because they're chasing the European rally, not because they had stronger political opinions. Money doesn't really have strong political opinions. It's just sort of the case. And here is some good news, some bigly good news. Now, okay, you guys still are talking about this. What's that reference? The Mandarin Mussolini. What? Okay, so there are two big buyers right now, before we get too politically incorrect here. buybacks. Buybacks are the number one buyer in the world of stocks are buybacks. There's nobody who's bigger. There's nobody more important. It's the most beautiful thing in the world. And the announcements, the authorizations of buybacks are pretty bigly right now. And typically April and May, I want to write that down, are very big, juicy buyback months. So we'd expect companies to buy a lot of their own stocks right now. Literally, they started on Friday. So this week kicks off and then it gets a little stronger going into the rest of next week. Second thing, and these are the good old computers, the algo funds I always talk about. They're basically computers who chase the market. So on this little chart here, which is peculiar color, I've never seen a banker choose purple and green. What sort of bank is this? What colors are you using for the chart? Purple and pink. Very odd. So purple are the computers, okay? The algo funds. And in green is normal people. So discretionary investors, people who make buying decisions, right? And the people are here in terms of, so up here is basically bullish. And down here is, scared. Doesn't look very scared, but you get the idea. Hair standing up. So what has to happen usually is that, look, when the algo funds are that low and the people up here, well, they catch up, right? They catch up. Every single time they catch up. So we're down here. They have a lot of catching up to do. So if the market continues to go decently this week, decent earnings, the buybacks and so on, then these algo funds are going to buy a boatload of stocks. They'll have to because they're systematic. They have to. There's just a little algorithm. They're like, we're going to buy. We can't help ourselves, right? So hungover banker, yes, yeah, probably. So some of you are still, it's very sweet, trying to teach me chipotle or however you pronounce it. Roasted jalapeno, that's the stock. They should change the ticker name to roasted jalapenos. So that's positive, right? So we've got two big buyers coming in there. So that is one of the reasons I'm feeling quite optimistic. The chart also tells me a lot. And obviously you guys in the coaching community, you've seen my full note already and you see sort of all my thoughts on that. But there is a little bit of a but. We're going to break those algos exactly, make them buy. Yes, I'm using bigly. I intend that to be a silly remark, by the way. I appreciate that's a silly reference. So it makes no sense. Yes. Futures. The future is bright. The future is orange. What does this chart show you? This chart shows you liquidity. That's a silly color to use, isn't it? We're going to use purple now, and no, that's not going to happen. I don't like purple. At least not the kind of bright purple. Sort of very dark purple is okay. Liquidity. Now, we're down here, and it doesn't take a rocket scientist to work out that liquidity is very, very low, historically low. And what does that mean? Well, it means that, like, if, Dr. Denise buys 3 shares today, she's moving the market. Right? I'm exaggerating slightly. But all we need is a little bit of good news, just a little bit of good news. Decent tweet will do. And it's a tinderbox, and you go up. But a little bit of bad news, you know what I'm saying? The same thing happens. So the market is very fragile. So we're being cautious. We're being careful. We're buying more defensive things. I'm optimistic, but there is a but, and you got to watch what Trump says. That's unfortunately the case. Normally I say, I don't care about politics, but at the moment it really matters a lot. So a lot of stuff happening this week. It's an insanely big week. You got all the big earnings. You got jobs data. You got inflation data. You've got Trump and tariffs and everything else. Now, for the third Sunday in a row, they've tweeted that negotiations are going well. I understand, at least with Asian partners. And by that, I presume they mean Korea and Japan, which is where you have very large numbers of troops stationed, which is probably a fairly good way of getting people to be compliant. So if they can't get deals with two of their closest allies, it would be a real problem, I'd think. But if they do get one of those deals through, now Korea has an election coming up. I'm not quite sure when, but soon. That might make it a little bit more slow. But Japan doesn't. So they really should get a deal through with Japan pretty quickly. And the market would then breathe a big sigh of relief and everybody's going to hit the buy button, right? So what are you going to buy? Well, honestly, before you buy a single stock today, do yourself a favor, learn the rules, at least learn the risk management. And this is the wrong chart again. It's down at the bottom of the screen. felixprehn.org/free, that one there. And you can actually learn the 3 rules that all the most successful investors out there use. And the number one you wanna master, as Winston always says to me, is risk management. That's really what it's all about. Make sure we still have tennis balls tomorrow, right? That's really what life's all about. Do you live in Croatia? No, never been to Croatia. It sounds lovely, but no, never been. I'm in Hong Kong right now. I know you can't tell if I make it bigger, but I'm in Hong Kong right now. And I'm going to hop into Europe for a bit, of course, over the summer. And then, yeah, that's usually what I do. Sort of my Europe, UK, bit in the summer, and then subtropics for the rest of the year. I can't stand the weather. Basically, my rule has become, over the years, that if I have to wear socks, I don't want to live there. It's not warm enough. So good start to the day. So far, so good. VIX is basically flat. Let's have a look at the Qs. Cat's okay. Yeah, cats are actually really good. Sweetest thing this morning. We have Tallulah, a little cat. She's like a kitten, but she's, I don't know, 18 or something. And she sleeps with Sabrina, who's the cat mummy. And let me see if I can pull up a picture, actually. This is now kitten time. As I have the chart open here. And yes, I just brought her in this morning. And then about 5 minutes later, I hear lots of squeaking and squealing. And the mummy, Sabrina, is trying to carry her kittens over to us because she misses Tallulah, which is, of course, really rather adorable. But no, I don't. I can find it. I can show you the work I was doing today. You want to see me working today? This is me working. This is my office. 1 cat, 2 cat, that's squeaky. And then I've got on my laptop, I put an extension chart, which is very cool. So I set up all my trades like that today. That was me working for about 45 minutes. Tough life. So there we are. I don't know what happened to the kitten pictures. They're somewhere. Took some nice ones today, but I don't know where they are. I'll find them. Anyway, I put some kitten videos in the video that's coming out later today. Robert is asking for the ATR thing, my friend. I think it's requested, Robert. Do you put it in the request again? Or there is a thing you can vote for. If you go into the roadmap here inside Trade Vision, there's a roadmap, which is literally based on what people are looking for. So you can search here for ATR. There it is, average true range. 60 people have requested it, including me. So that seems pretty likely that that's going to get done. It's actually got some comments on it as well. What are people saying? This would be huge. Yeah, so just vote on that, and it'll happen because that's how we build stuff. Basically, we build what you guys ask for. So that's really what it's all about. Now, okay, quick run through of key stocks here. Nasdaq is basically flat, which is decent. SPY is also flat, so that's good. That's all I want. All I want for what is it? Labor Day is the spoils of the financial markets. Isn't that what it's all about? Isn't that what the unions wanted? Edward's asking, is it okay to buy the SPY right now? My friend, that's another question that I'm legally permitted to answer. What I would ask you is, what is your purpose? What is your goal? What's your time frame? What do you own? Why are you buying? What are you buying for? And that's about it, really. That's what I would write out. And then I'd make sure I understood risk management. That's really it. Scott, Memorial Day. Is that what you call it in the US? 1st of May? In Europe, they call it Labor Day. That's when it used to be when the trade unions would go and sort of just walk about. And then it was when the left-wing nutters started to set cars on fire. And now I think it's when left-wing nutters and anti-immigration protesters and immigrants fight in European streets and set them on fire and, have fun with it. I think that's sort of it nowadays. Will Ford go down to $2? Did you know that Ford built B-2 bombers in World War II, one every 63 minutes? I watched a random documentary the other day. So this is not a pretty chart. Why is this not a pretty chart? Well, two things you'll observe. Stocks falling. Well, it is Ford, sort of to be expected. But you see that purple line here, that one? That's the 150-day moving average line. That's sort of what says to investors, sell. And we've hit it once. We've hit it 1, 2, 3 more times. 4th time almost. And right now for the 5th time. And each time we fail. So each time we get to it, it gets worse. That's the way I'm looking at it. So I wouldn't touch it. I wouldn't buy it. I wouldn't own it. I'd sell it if I was gifted it. That's the way I would look at that right now. It's a bit harsh, perhaps, but you know what I'm saying. Next, we need to say huge instead of huge. Yes, I've also already started to do that. I think it's going to be low. The Dutch do not have the 1st of May off. Okay, that's very good of you. The Dutch are good people. I like the Dutch. The Dutch are nice people. It's hard not to like the Dutch, really, isn't it? It's a bit like the Irish. They're also very likable. All right, any other stocks you want to still look at? Maybe Palantir? Yeah, that looks pretty good. I was actually going to put that in my note to you guys today, and I thought it was a bit complex. I'd say it's looking tremendous. It's looking a little extended. It's looking a little extended here. This sort of rally up on not huge volume, or huge volume, as I should say, but it's a thing of beauty. What those guys are building. If they can really deliver on what they're planning to build, they'll be the windows of everything. I think that's the holy grail, I think, of Palantir here. They could literally be the windows of everything autonomous, and everything will be autonomous. It won't just be the cars and the robots. It'll be every ship, every boat, every plane, everything will be autonomous. And you need an operating system for that actually talks to each other. So it makes a lot of sense. What else have we got? SoFi looks pretty sweet. Actually, very sweet. Looks like, you want to hug it and say thank you. Anybody who sees Andrew Noto, go up to him and give him a big hug. Probably got security and they'll taser you or something. But yeah, you see here the highs that I connected, right? Uno, dos, jalapeno. And then we broke through that very nicely here. We broke through the 50-day moving average line very nicely here. We broke through the 150-day moving average line here, but it's sort of around that. So what's the fly in the ointment? The 50-day is still pointing down. That's the only problem. But on the rally up, volume is picking up. So we're going into earnings here with some nice oomph. And yeah, I like it. Looks good. Looks good. Tony is not trying to sell me anything. 2 things I can't stand: intolerant people and the Dutch. No, the Dutch are lovely. The Dutch are really nice. I mean, I'm German and the Dutch are nice to me. I mean, must take some discipline on that part. I used to do quite a lot of business with the Dutch, actually. I still do, actually, but don't really focus on it anymore. Alcohol trading business, sort of chemicals and stuff, and a lot of this kind of distribution and logistics is in the Netherlands. For Europe, sort of the biggest port for Europe. I dealt with them all the time. Also, all the big alcohol companies in the Netherlands. Lovely people, honestly. Always lovely people. Easy to deal with. Know exactly what they want. If there's ever an issue, they're like, all right, let's fix it. They're just like really laid back, but yeah, good people. Honestly, probably sort of the favorite Europeans, I'd say, if that's a thing. This Dutch wants to leave the EU. I don't blame you, my friend. I don't blame you at all. The apparatchiks are, there for the ever greater bureaucracy. It's going to be the end of the place, if you ask me. But nobody asks me, and I don't get to vote, and I don't live there. I just spend a few weeks there every year when the sun shines, and I'm very happy about it, and I don't care about the politics all that much. Well, I do care, but I pretend not to. Right, Nvidia's down 2.3%. Okay, it just continues its downward trend, right, which is kind of to be expected. The whole chip sector isn't really finding its feet yet. AMD is still down yet again. Looks like another failed breakout attempt there. What about Intel? Is that still a company? Yep, and it's down a little. Just a little, not a lot, but just a little. Isn't it? Yes. How's that down on a green chart? That's a bit odd, isn't it? Looks like it's up a little, but it says it's down a little. Let me hit refresh. Intel just cut a bunch of jobs. Yeah, but about 20,000 of them, apparently. They hope that that'll make a difference. I doubt it. They probably lost, I mean, you know, the good people are probably going to leave, aren't they? Isn't that what the problem is? Mark is asking me in German about Alibaba. Yeah, no real opinions there. A lot of politics. Don says, please tell my wife. Tell her what, my friend? You've got to put it together because it's too much chat here. I can't see the whole thing. Spirits, you sold your AMD. Well, I wish you better luck with picking stocks. It's not about luck, by the way. Is AMD a bargain price? No. That's my opinion. I think AMD is in the doghouse, and I think it'll remain there for some time. When it recovers and when it comes back out of it, we shall buy it again. Otherwise, we won't. Body and Soul says, Felix, why is the Mansfield RSI in your course? Is it an alternative? Because it's amazing, Mansfield. I'll tell you why. Okay, so if you want to know whether Intel is, even though it's falling, is it doing better or worse than semiconductors, its competitors? This little thing here, Mansfield RSI, tells you it's in minus 0.7. It tells you it's underperforming the sector. So if you pull up NVIDIA and you see how are they doing, they're also horribly underperforming the sector. So it tells you whether or not a company is doing well compared to its competitors. That's a really, really, really important metric. It's really one you want to understand because you want to buy the stocks that are beating their competitors to a pulp, right? Look at Palantir. It's a 9. It's a 9, right? It's not a minus. They're hugely competing against the other tech companies out there, and they're just, you know, wiping the floor with them. So it's stocks like that you want to be in. I'm not saying you should therefore buy Palantir, but you don't want to be in the ones that are underperforming. Because first of all, sector can be rubbish, right? The whole industry can be terrible for the moment, but you really, really only ever want to buy the best in the industry. You don't want to buy number 10 in the industry. So it's a very, very useful metric. RSI tells you only whether a stock is performing well against itself, which isn't really all that useful because the stock chart already told you that, right? So do we have RSI in here? Yeah, we do. There we go. See, I never have it on. So it's telling you that Palantir is a little expensive. It's a little extended. That's what it's telling you. It's not that useful because you could see that from the chart. So I wouldn't really bother with it. I know people always saying, "Oh, it's oversold" or whatever. Yeah, that doesn't. I don't think that works. I just don't think it really works. But honestly, if you really want to learn like those things, those real rules that the actual guys on Wall Street and in Chicago use to actually make money with, then click on the link down below, felixfranz.org/get free. I'll put it in the chat for you as well. There it is. And you can click on that. I'll pin it to the top as well. It's also down below in the description. And I wish you a beautiful, wonderful rest of your day. And I hope to see you live tomorrow. All the best.